Before we start, I would like to give a very short introduction of Mr. Ambareesh Baliga, sir, our small case manager. He's experienced in different facets of the market for over last 35 years. He began his financial career with Pricewaterhouse, Kolkata. Since then, he has worked with reputed firms like Kotak Karvi, Way to Wealth, and Edelweiss, etc. He's been a regular guest on primetime business channels like CNBC, CNBC Awaz, NDTV, and Z Business in the last 2 decades. He also regularly publishes articles on stock markets in Business Standard and Outlook Business. So, before we start today's conversation on deep value and contrarian investing, a very warm welcome to you, sir, and to the audience.
Thanks, Mishika.
Yeah, so before we start, tell us about your investing journey so far. Like, how has it been?
Uh, it's in fact been closer to 40 years. I started investing in 1983. That's when I had just joined college. So initially it was more of IPOs, and then I started investing and trading in the markets. And unlike now, I mean, in those days you needed to get introduced to a broker. He had to get comfortable with you, and then it was more of physical. It was only physical trading at that point of time. And I mean, we never had any confirmed settlements. It used to take place once in every 15 days. Possibly at times it used to extend to about a month. So it was more of trust than anything else at that point of time. And just like any other sorry new investor, I mean, I was also quite confused. I mean, I was trading short term when in profits, and became a long term investor when my trading bets went wrong. Bought on tips without knowing what the company does, just because a friend or some acquaintance recommended that. Because those days you didn't have channels, so it was more of word of mouth. Then slowly got down to understanding this game. Made some decent money in about 5 or 6 years post that, and then we had the liberalization in 1991, and post that we had a boom, which people call the Harshad Mehta boom. And that is the time we thought
Right.
that's the time we thought that the markets will never correct. I mean, India's long-term story has just started; it's opening up, etc., etc. But finally, I mean, many of us were actually taken to the cleaners post that Harshad Mehta scam. Then again, during the IT boom, um, I mean, that's the time. I mean, by that time, I had about 15 years experience in the market. But still, we again thought this time is different. This is IT, so it's going to be different. This is the future. But again, finally, everything came crashing down. So one thing which I've learned from this market in so many years is that the story is the same every time. The screenplay is different. The actors are different. So last 40 years, I've seen so many people becoming wealthy. At the same time, there have been quite a few I've known who have lost heavily, never to return to the markets again. But India has grown year on year in the last so many years. So naturally, most would have seen growth. I mean, by I'm not even doing anything great, just by holding a bunch of decent stocks, people would have made money in the last so many years if one had held on. But I think the most important thing in this is discipline. And this discipline, I in fact got after the tech boom and bust. That is when I actually settled down with long term investment. I started looking at what is now called value investment. I don't trade unless the portfolio stock has given me a better than expected sort of returns in a shorter time frame. That's when I use those opportunities to sell and buy back. But I don't trade for trading's sake. And at the same time, I don't watch the markets for all those 6.5 hours. I mean, there are a lot of other things to do than watching the markets through the session. So I've been now more of a value investor.
That's great, sir. Like, amazing to listen to your journey. And, we take a lot of inspiration from you. Like, I've heard you multiple times on business channels, and, I've always admired. So, it's a very prestigious moment for me to host you also.
Thanks, Michelle.
I am Risa. To begin, for everyone here who might not know what value investing is or deep value investing is, Can you just elaborate on how you see value and deep value investing?
I'll just explain this in very short because see, I mean, deep value stocks are those where you see a huge opportunity going ahead, but currently they could be ignored and may not just be ignored or not known to the market participants, but it's possible that many would be convinced that this stock will never do well at all going ahead. So basically, if people have written off those stocks, that actually adds that extra discount to those stocks, which actually turn deep value for you. A value stock actually becomes deep value when most of the people on the street are convinced that this stock will never move up. So that gives that extra premium. I mean, just to give you an example, I mean, I normally wouldn't like to take names, but then say for example something like a GMR Infra. About I think 3 4 years back, looking at the way the sector was doing, looking at the sort of I mean a balance sheet which they had with huge debts, and a couple of verticals, especially the power vertical, which people thought was a write-off. Only the airports were doing well for them. I think most of the people had written off this stock, saying that it will become possibly the next GVK. But then, I mean, I had recommended this, I think, when it was about 16 rupees, and today it's about 3x that and still quite strong. Clearly, I mean, the company has turned around, paying off the debts. In fact, they've lowered their debt by a decent amount. And in fact, each of those verticals are doing extremely well, especially the airport vertical is doing well. They've been able to restructure their power vertical. So things are falling in place. And this is what you normally get when you look at those deep value stocks. I mean, you get multiple times.
So, quite interesting. When you look at a company like GMR Infra, what or any other deep value stock, what are some of the characteristics you look for beyond mispricing?
No, I mean, basically, you need to see whether they're in a sector which can do well going ahead. So, if you're convinced with that, then you have to see whether, I mean, this particular company can actually turn around or not. And the most important input for that is the management. I mean, look at the sort of experience which the management has, and the intent of the management is most important. So, if all these things fall in place, then you can say that yes, I mean, today, I mean, although the company may not be doing well, but going ahead, things can turn around. So that's what you normally look for.
Okay. So, while you look for deep value, you also check management and everything. So, how do you differentiate between a deep value and a value trap?
Uh, something which you think is deep value turns out to be a fictional story without any ground level changes to prove the intent of the management. This, in fact, is when a deep value turns into a value trap. Because all that you hear, I mean, you may be decently convinced that the sector should do well, the company should turn around, but then all that you keep hearing from the management possibly is a fictional story. And quarter on quarter, month on month, you don't see anything changing at the ground level, which points to the fact that the company is moving forward and not stationary or going back. So, if the story turns out to be fictional, and if you're fast enough to realize that, then possibly you can move out of the value trap. Otherwise, you fall into the value trap.
Interesting. You also pointed out that with GMR Infra, uh, the sector itself was not looked at favorably by the market. So, do you see this as a pattern within deep value companies where their entire sectors aren't favored by the market?
Yeah, I mean, typically that is the case. That I mean, you have a sector which is not doing too well, and that's the sector you will find a lot of deep value stocks. But at the same time, there can be, other stocks in different sectors where the sector overall may be doing fine, but this particular company may be doing badly because of whatever other reasons. I mean, there can be other reasons for which the company may not have done well. Possibly the earlier management, uh, may have actually fallen short to a certain extent. There could have been a issue with one of the customers, main customers of the company, because of which, this specific company fell on bad days. So there can be various other reasons. So if you think that those reasons are out of the way and the company can come back on track, that could be deep value in the specific sector which is doing well, but this particular stock may not be doing well.
Fair point. Fair point. Do you look for these sorts of potential triggers before you invest in these deep value companies? For example, like you would know that something about the company is going to lead to increased margins, and
Right.
therefore you're investing in it.
Yeah, exactly. See, when you're investing in a deep value company, you should be clear as to what are the triggers which can actually lead to this value creation. Yeah. So you're either investing in a company which, like I said, is not doing too well now and expected to turn around. So that is clearly a potential trigger. But I think the most important typically, when you look at deep value, you look at quite a few of these small and mid-sized companies, and the most important thing for these companies to do is to start talking to investors, and that is generally what I tell to the managements I meet. I clearly tell them that your company is a product and it has to be packaged well. So you need to speak to investors and analysts and be truthful. That's most important, because nowadays people are smart enough to see through. So you need to deliver what you promise. That will actually improve your brand in the stock market, just like a well packaged product delivering the quality we expect. So it is not enough if you turn around and do well. People, all around should know that you're doing well. And that is what I tell most of these mid and small sized company managements.
Absolutely, I couldn't agree with you more. But what if these managements don't respond, or what if the company is still not recognized by the market? How long are you willing to hold for?
No, see, when you're a deep value investor, you need to have a lot of patience. So when I talk about patience, it may last a couple of years. I'll just give you another example. Like for example, the holding companies. I still don't understand why some of these companies should be quoting at an 80% discount to the underlying. You have, say for example, the underlying is valued at say 10,000 rupees or 12,000 rupees per equity share of that holding company, but the stock is quoting below 2,000, which is more than 80% discount. Why shouldn't it be 50%? Why shouldn't it be 40%? Again, there's no logic. So, in fact, I've been suggesting a few of these holding companies to whom I talk to. I've been telling them, why don't you do a buyback with the cash available? You may have sold some of your investments, you're getting dividend income. Instead of paying dividend to investors, you do a buyback, because you know that you are buying at 20 rupees what is actually worth 100 rupees, and it is there in your book. So this way you can actually reduce the equity capital and increase shareholder wealth. So this possibly could be a trigger if some of the holding companies start doing that buy back their own shares with the sort of cash which they have in hand. I think that will change the possibly view on the holding companies by investors. Otherwise, I don't see any logic as to why they should be putting at such a huge discount. And I don't mind holding on, because especially in a market like this, which is decently uncertain, I would say the markets are a bit uncertain at this point of time. So these holding companies will actually give me that cushion on the downside. So I'll hold.
A super point, very nicely explained, sir. So while value has underperformed growth for the last few years, what's your take on style drift, and do you deviate from your style at all? If yes, in what circumstances?
No, you cannot say that I will not deviate from my style at all. I mean, it is fine to allocate a portion of your portfolio to follow a theme or style which is working at that point of time. But that doesn't mean that you should abandon your style with which you're comfortable with. I mean, I wouldn't suggest that, at least I wouldn't do it. I mean, I know my style requires patience, and I have enough of that. And I would carry on with what has worked for me in the last 20 years. I'm quite sure it'll work for me going ahead also.
Yeah, so as they say that time in markets is more important than timing the markets.
Exactly.
Yeah. So, sir, what's your view on some new age businesses that are trading at crazy valuations? Like, are they so dominant that we can ignore the valuation, or it's otherwise?
No, see, from tulip mania, which was, I think, about 350, 400 years back, to the tech bubble, which we saw about 20 years back, I think we have read about all that. Some of us have experienced some of these bubbles. Again, during tech bubble, a company which had a decent website was considered good for valuation. I mean, if you have a good website, your valuation should go up. That is a sort of a thought was there at that point of time. Today, in fact, you have liquidity chasing these new age businesses, and some of them surely will survive and go to greater heights, possibly generate a lot of cash, and quite a few of them may actually fade away. Now, which will survive, which will fade, I'm not in a position to gauge that now. However, I mean, I will not pay this sort of a valuation for these companies. So for me, these are not investments at that. I mean, at this point of time. However, I mean, you have seen an opportunity in this euphoria. So, I mean, how do I use this opportunity? I've been applying for most of these IPOs, except, for example, something like a Paytm, and similar to Paytm, I've not applied, but I've been applying for most of these new age company IPOs, and I exit in the first couple of days because there is no way I can value them. I'm getting a good sort of a profit, I'm exiting. So this is the way I've been playing this. So whatever opportunities are there, see as to how you can play the opportunity. I mean, even if you don't believe in them, but then remain with your long-term investments where you believe in and where you understand.
Absolutely. I think we can now talk a little bit more about how you're playing the opportunities in the form of a small case rapid fire. So
Sure.
Mishra and me will do a small rapid fire,
Right.
asking you questions that commonly come up. So the first question is around position sizing, and how do you look at portfolio allocation within this small case?
No, see, currently, I mean, I have in a couple of sectors, although I can't cover all the sectors in my small case because it's not a very large portfolio. So I've covered mining, auto ancillaries, aerospace, FMCG, investments. Again, it's a holding company, pharma, and an NBFC.
Interesting. And would you be able to tell me how many stocks roughly do you hold?
I
And
I have about seven stocks. One is about one stock is about 20%. There are four stocks which are 15% each, which makes it 60% and 20 80%. And then I have two stocks which are 10%. So that's a 100% portfolio.
That's really cool, sir. Sir, what's your favorite value stock from your own small case? If you could discuss a bit about it.
Okay, there's one stock which I'll discuss is IRFC. This is the NBFC which I have in the portfolio. And this has been my favorite stock again because this is why I think one of the most ignored stocks in the market. What does IRFC do? IRFC takes funds from the market and it lends to Indian Railways. What is Indian Railways? A government organization. Is there any way Indian Railways can fail? I don't
No.
think so. Yes.
Yeah.
So this is possibly the only NBFC which can be assured that there'll be no bad debts. There are no NPAs.
Correct.
Yeah.
Right.
Uh, and I mean, what does it earn? It earns about 35 to 40 basis points differential between what it borrows at and what it lends. And it's a very small team, so expenses are very less. I mean, they have about, I think, 25 to 27 people in the company, and it's been growing at about 35-40% year on year. So you're seeing growth. There is no downside. You're getting a decently fixed sort of a return. And dividends, they've been paying extremely good dividends. You're getting a dividend yield of about 7.5%, which is better than what the fixed deposits are giving. Plus, like I said, since the company is growing at about 35-40%, shouldn't the stock move at least by 20-25% every year? So, although it's not moved in the last 1 year, somewhere that I think that catch up will happen. And that is when you'll get both yield and as well as returns. So, I mean, in a market like this is one of those stocks which doesn't have a downside, whereas there's a very decent upside.
That's wonderfully explained, sir. Sir, are there any overlooked sectors right now that you have, included in your small case?
I mean, the sectors which have been overlooked by the markets, or
Yeah, overlooked by the markets only.
uh, yeah, I mean, one sector which has been overlooked by the markets is FMCG, where again, I mean, the last 2 to 3 quarters have been a bit slow, but I see FMCG again picking up in the new year. So that's one space which I think the market has overlooked, and which is there in my portfolio, which should do well.
That's cool. I think, sir, now we can open the question and answer round for the audiences also.
Sure.
So, guys, you can, send me requests, or you can send the question in my or Krishna's DM. We'll ask in place of you. Sir, I already have one question in the DM. So they want to know about your exit strategy in deep value investing that follows.
See, my exit strategy has been that, see, I have a target price. Whenever I pick up a stock, I normally have a target price in mind. And as and when that is achieved, we again review whether we should hold on or whether we should exit. Because whatever we had seen possibly a year and a half, 2 years back, I mean, today it could be very much different, because you have the last 2 years financials in space in place, and you also know as to what are the news flows in the last 2 years and what's happening as of now in the company. So it's very much possible that you could change your target price, or you may say that yes, this is all that we see for the time being, so possibly one should exit. So in case I am not revising the target price, I would exit.
We have one more interesting question, that is, do you do financial modeling and some Excel work before investing, or do you only rely on the fundamental story?
See, we start off with the fundamental story, and if we like that, then we have to do financial modeling. We cannot do without doing that. So, I mean, both are done, but we start off with the story.
I think we can go on with our speaker, Pawan.
Hi, sir. Good evening.
Good evening, Pawan.
Yeah. Good evening, everyone. So my question over here is like, sir, you are speaking about GMR Infra.
Right.
Yeah, I was thinking that wherein FIIs are investing more when compared to the other investors, retail.
Yeah.
Okay. So here my question goes like, what FIIs are seeing, where retail investors couldn't able to see that, what they are seeing in that. Go to financials, it's they are mainly into the losses now.
No, but it's like turning around.
Because the friendship goes around.
No, there is some disturbance.
So
Yeah,
that
I mean this company is turning around very
okay.
clearly, and if you look at the airports business, I think FIs are investing not for the power business or the roads business which they had earlier.
Okay.
They are investing for the airport business, which is where we will see a huge growth because a lot of airports are being privatized in India. And at the same time, if you see, GMR has been able to get a lot of, orders from overseas where they are building and managing airports at various overseas locations. And the way I see it is there's a huge opportunity just not in airports, but also in railway stations. I think that is the next big area which is opening up. And unlike airports, where most of the airports are outside the city limits, or at least were outside the city limits earlier, most of the railway stations are very centrally located. And the way these operators earn is by giving out, the land or the constructed area in and around the airport or the railway station on lease, and that's the way they earn. So I think railway stations would be the next big area for most of these airport operators.
We can go with another question that came in my DM. Sir, how do you think will small caps perform in 2022?
Uh, See, I mean, even in 2021, the last 9 months, my small cap had performed decently well. In the last, I think, about a month, it has corrected along with the markets, but still outperforming. But in 2022, I don't see the sort of performance from the markets like what we saw in 21. But mine being a contrarian small case portfolio, I see a major outperformance. So, in fact, even if the market goes negative, I don't see my portfolio going negative. And in case the market holds on, I assume that I should get at least about 80 to 20% sort of return on my small case portfolio.
Okay, that's great. I think we can go with next speaker, Utkarsh.
Hello, sir.
Hi, Utkarsh.
Sir, I want to ask, do you actually rely on the charts or the technicals when you exit or enter the stock, or is it just purely some kind of fundamental value play, which you usually do?
No, I mean, we do look at charts just before, we recommend or we pick up a particular stock or when we sell. But the weightage given to technicals is very, very small. So you can say, yes, we do look at technicals, but that is not the deciding factor for us. We could say that possibly maybe wait for a week to buy or wait for the next 10 days to buy because you could see lower levels. That is all that we look at. We don't decide based on technicals.
Okay.
Thank you, Utkarsh. We have another question from the audience. That is, sir, what do you think about the startups that are popping up in the FMCG sector? Lately, there have been many like Navi, Credit B, and many others. So, what's your view on that?
Unfortunately, I've been so tied down by secondary markets that I've not really looked at the startup space very closely. So I think it'll be a bit difficult for me to comment on that.
Hemant, you want to go next?
Yeah, sir. I just want to know what is your view for the chemical sector for 22?
So again, in chemical sector, if you're talking of specialty chemicals, I really don't see specialty chemicals as such outperforming in 2022 because we already had a 2 year outperformance on that China plus one story, and that's already digested. Now, unless we see superior returns in terms of performance from these specialty chemical companies, I don't really see an outperformance because most of the people are, over invested in this sector.
Okay, okay, sir. Thank you.
There's a question in my DMs about the AMC space and your thoughts on why it hasn't performed lately.
Um, why, in the sense, I suppose some of the larger AMCs, which were supposed to get a lion's share uh, of the investors' money, haven't really got that much of share. It is I suppose, the smaller AMCs which got, and a decent amount has gone into AIFs as well as PMSs. Uh, Again, I would say something like a HDFC AMC. I mean, didn't perform because of that reason. But I think at these levels, something like a HDFC AMC, there's a decent amount of value. I've also recently recommended that on a couple of channels. So that's one space where I see value as far as HDFC AMC is concerned.
And what would be a few other spaces where you're seeing value in 2022?
Other spaces, I mean, I would surely look at the automobile space, especially for four-wheelers and HCV, LCV. Possibly, I would ignore the two-wheeler space there because, the two-wheeler space will be the one getting affected by EVs. That's the first one to get affected by EVs. So there could be some amount of disruption in the two-wheeler space. But four-wheeler and the passenger cars and HCV, LCV space is what I would look at.
What is your opinion on some of the automakers, the four-wheeler guys, not making a foray into electric vehicles so far?
No, I mean, I would not really agree with that. I mean, I think the only one who has not really made a full foray into electric vehicles is Maruti. But then we should remember that Suzuki, has a very close sort of a thing with Toyota. And Toyota has models in EVs. In fact, they were among the first ones to really have a hybrid vehicle. Since the last, I think, if I'm not wrong, the last 2 decades they've been having hybrid vehicle. They have a technology for EVs, and that is exactly what Maruti will take up. And I think that should happen sooner than later. I think they've already spoken about that publicly recently. And if I'm not wrong, we should have a couple of launches by Maruti in 2022 in the EV space. Now, when we talk of Mahindras, they already have EVs, but at the lower level. Tata Motors already has, also in JLR. So, these are the ones which I think should do decently well going ahead, because I don't think any of them will be falling behind. But when it comes to two-wheelers, I don't see the same thing happening as far as all these big names are concerned. So that's the reason I feel that that could be some sort of a disruption in the two-wheeler space as compared to possibly the four-wheelers and HCV LCVs.
So we have one question in our DM, that is, what's your view on the renewable energy space?
Clearly that's the future, because of which, all these thermal power companies are clearly moving towards renewable energy space. I mean, if you talk of Tata Power, they're talking of, I think, what, 50% by 2030. The power portfolio will have 50% of renewable energy as compared to thermal. NTPC is moving towards that. So that clearly is the future. But then at the same time, I don't think thermal power will go out, or coal demand will go up so early.
Okay, sir. So one more question. How do you see the ethanol story turning around? Are the sugar companies going to benefit the most, or the new independent ethanol manufacturing companies should evolve in the future?
See, ethanol mixing in petrol has been allowed up to 20%. But as of now, just about 8.5% is getting mixed. Again, this is because of unavailability of ethanol. So there is a decent amount of headroom for increase in ethanol capacity. And I suppose the biggest beneficiaries would be sugar companies as compared to the independent manufacturers. Because, I mean, what was a negative for sugar companies earlier has today become a positive for them. I'll explain this. Uh, See, whenever a particular business is forced to buy the raw material, which is sugarcane, because every sugar company has, has to buy the sugarcane from a certain sort of a radius around the mill. So once they have bought the raw material, which is the sugarcane, they just can't store it. They have to crush it because within a couple of hours it deteriorates. So once you have crushed it, sugar companies did not have a choice but to make sugar, and along with sugar came out ethanol. This was a story till a couple of years back. In the last 2 years, what the government has changed through its policy is that it has given the choice to the sugar mills. You can either make sugar or you can make ethanol, or you can make both in whichever percentages you want. So this has given a choice to the sugar mill companies to make sugar. If the sugar demand is high, if the inventory is low, they can make sugar. If not, they can make ethanol. They can make 100% ethanol. So nobody to question that. So I think this has given a huge leverage to the sugar companies. And the reason why I'm more positive on sugar companies than independent manufacturers of ethanol is because today you have a choice. I mean, they have a choice whether to make sugar or ethanol. If tomorrow the sugar prices go up for whatever reason, I mean, they can make more of sugar, less of ethanol.
Absolutely. Mohit, you want to go next?
Yeah, hi, hi. Thanks, Krishna. Quick follow-up question, if I may, specifically on the renewables that you said. I mean, if you absolutely exciting what's happening in the, let's say, the solar and the wind space. But if you look at the projects, I mean, all what they give you is dead rate of returns, right? Four,
Right.
5%, and even going down, right? So although it may be exciting and it may be changing the world, but that's not where the money is being made or will be made. So if you can kind of delve a bit deeper into in what parts of the value chain do you specifically see value, and just try and explain that up a bit, that'll be great. Thank you.
See, what part of the value chain there's specific value is one. It would be clearly, today and possibly for the next decade or 2 decades, it will be mostly the manufacturers who will make the money. So, if you're talking of the next 2 decades, I think you should look at those who are manufacturing, possibly the wind generators, or those who are manufacturing the solar cells. I think they are the ones who will make money.
However, if I look at it, right, I mean, yes, probably, but I mean, at the end of the day, they will form a part of the project, right? Because you are supplying into the project.
Yes.
So if you're doing that, and the rate of returns on the project itself are very constrained, of course the squeeze will come on the suppliers. Absolutely, right? I mean, that
Yeah.
that is law of how economics 101 works.
That's true. I
So
mean,
I mean,
that would happen over a longer period of time. But
okay.
today, when most of the governments are giving you sops or those lollipops to set up, clearly the demand will outstrip the supply. And I suppose this is one of the reasons, if you see, why Reliance has gone out of the way to invest in a manufacturer.
Yeah, I mean, I kind of
Yeah.
agree with that, but
Yeah.
I mean, to be seen, I mean, what kind of foray they kind of really do in the manufacturing space. I mean, it is all, to be fair, at the moment, lot of announcements around
Right.
what they want to do, rather than actual substance on where exactly and how much money. I mean, absolutely, they are the lowest cost provider. If anyone can do it at the lowest cost, they are probably the one.
Yes.
Thank you.
Okay, thanks for it.
Cool. Let's go to Akhil and then Fatehpur.
Yeah, thank you, Krishna. Hi, sir. I just wanted to check
Hi,
if
Phil.
you are tracking the China Plus One theme, and if so, if yes, then which sectors do you see benefiting from this?
See, I mean, clearly one was the specialty chemicals part which had benefited. Now, I think it's going to be the textile space because there's a very clear ban on specific regions from China. And as far as India is concerned, China was in textiles. China was one of the major competitors. So that's one space I think, and especially in home textiles is where India India would get that major fillip because of China plus one.
Okay, thank you, sir.
Yeah, yeah. So now my question is related to this textile only. Like in export, which company will be the benefited with China plus one? Also, there is a huge raw material price hike in the current quarter, and valuation is too tight. So, are you expecting a weak quarter because of the high raw material prices and correction into the existing share prices?
No, I mean, see, typically all these orders which they get are cost plus orders. So the raw material price increase should not really affect too much. Even if it affects, it will affect only for a very short time. Yeah. But I think the major fillip what they've got is that ban which has come now. So, uh, I mean, especially like I told you, the home textile companies should do extremely well.
Okay.
Cool. We've got a question in the DMs about your view on pharma going into 2022.
See, I don't think we should look at pharma from a year's perspective. I think we should look at pharma from a 10 years perspective. And in 10 years, it's expected that the top line of the Indian pharma sector will grow at least about 2.5 to 3 times. And that's exactly what we saw happening when the pharma sector opened up in the early 2000s. Uh, and the sort of a run up which we had, at least till about 2008, 2010, in the pharma companies. I think we could see something similar in this decade. So I would suggest don't look at it from a year's perspective. I mean, again, I'm talking of the top end or the at least the top 15, 20 companies in pharma. Look at it from a much longer term perspective.
Thank you. Just want to quickly point out that we're going to take about 3, 4 more questions before we close. Please DM them either to Mishika or to me, so that we can manage to like get as many questions in before we reach 8 o'clock. Uh,
I have a question in my DM. So they are asking that what do you think about the China tech sector in 2022 as it has corrected a lot already?
Again, China tech sector, I don't track closely, so it will not be right on my part to really comment on that.
Okay, sir. And one more question that you just shared your view about the chemical sector. So is it the same for the agrochemicals as well?
Uh, no, see, agrochemicals, in fact, even traditionally, I would say, when I say traditionally, I would say in the last 8, 10 years, that quite a few of our agrochemical giants have actually become multinationals in their own way. So, uh, China factor really wouldn't have affected the agrochemical space in the past. So, there is no major gain on the China plus one as far as agrochemical space is concerned. So there the growth will continue as it is, and that's one space again where I'm quite bullish on. But if you're trying to play from the China plus one point of view, no, I don't think it'll have any effect.
cool. We've got one more question about how do you see like you pointed out that your portfolio is super concentrated. A lot of retail investors feel really scared about investing a lot in one position. So what would be a way that they can build conviction?
No, no. See, the small case portfolio may be concentrated, but I mean, my portfolio, which is a value portfolio, I mean, that is not surely concentrated like this. And as far as small case is concerned, I mean, my picks in that, I think it should not exceed possibly 5-7% of your portfolio. So do not buy 100% of your portfolio in my small cases. You should never do that because it's too concentrated. So do not exceed 5 to 7%.
Interesting.
Krishna, can I
So
possibly
we
squeeze?
have,
Sorry.
yeah, Mohit, go ahead.
Oh, thank you very much. That's very kind. Amrish, a quick one from me on the tech sector, just following up from what you said.
Yeah.
Do you see any kind of tailwinds given what's happening in the tech sector for particularly the Indian IT companies? And more importantly, I mean, I would want to kind of separate out IT services from, let's say, the companies who are providing some sort of R&D or cramps, as we may call them,
Right.
or pure technology. So, any kind of a view on those? I mean, where would you look at? Plus, a view on, let's say, the tailwinds that could be happening in 2022. So, things like, I don't know, dollar strength, other things. I mean, just wanted to get a rounded view from you on that.
Yeah, see, I mean, see, currently what is helping the tech sector, at least in the near term, is the essential results, which I think people think will get replicated in our techs, I mean, in the listed entities, which will announce their earnings from January second week. That's one. And number two, the recent rupee weakening, which I mean should provide some sort of a push. But then this I think would be only temporary because the rupee weakness actually plays out only for a very short while because finally everything gets adjusted. Um, I mean, as far as these IT companies are concerned. So at these levels, I'm finding most of them slightly on the expensive side. So I would possibly wait a while.
And even on the, I mean, I agree with the services totally with you,
Yeah.
because the demand supply might catch up,
Yes.
both on the dollar side or anything else.
Yeah.
But any view on the grams or the season, or the
Yeah.
contract R&D side of things,
Yeah,
or
I mean,
any sort of pure tech?
see, companies like those, again, I would wait for a while for a correction before getting in. But, I mean, that's the space to be in as compared to the other services. I mean, like for example, Tata Elxsi. I think one should look at slightly lower levels to get into that, but that's again a long-term investment. Similarly, in the mid cap space, maybe a KPIT.
Hmm.
Yeah, yeah. But then we have already seen a extremely good run up, and
That's right.
the way I see the markets, I think they're just poised for a correction. They require a reason for a correction, so
Hmm.
utilize that.
Sure. Yeah. Patience is the name of the game.
Yeah.
Thank you.
We've got two more questions in the DM about sectors which they think are deep value. So one is private banks and the second one is real estate. Do you look at them as deep value sectors?
Again, private sector banks, which are the ones? I mean, if you're talking of a HDFC, a Kotak, or ICICI Bank, I think they are decently well priced. Nothing immediately, but they'll keep giving you that 15%, 20% sort of a return year on year if you're talking of very long term. Or are you talking of a South Indian bank, a Karur Vysya bank, or a federal bank? Possibly yes. But then be very careful on, I mean, at least do a decent study before getting in because you never know what sort of surprises can come in, like RBL, which we saw a couple of days back. If you're talking of real estate, there was value some time
Absolutely.
back.
What about real estate?
Yeah, about real estate, there was value some time back, but at this point, I think most of them are fully priced. If you're talking of the next 6 months to a year, there is a very clear turnaround which has happened in real estate, because in the last 3 4 years, uh, I mean, at least the inefficient ones, the dubious ones have all disappeared. There has been a consolidation, and clearly, I mean, there's much more transparency today in the real estate sector than earlier. And the COVID has somehow given that push for affordable housing, because people are looking to buy bigger houses, even if it is slightly away from the city center. So that's where the affordable housing play has really worked very well, because so many of the real estate firms which I am tracking have actually reported what, nearly 70, 80, 100% jump in the sales which they've done. So at least the next couple of years looks good for real estate. Again, I don't mean to say that the property prices are going to go up. Property prices may not go up like what we saw from 2003 4 to 2012 13. I mean, that's mind boggling. So although property prices may move up a bit more from here because of the cost push, because steel, cement, everything, I mean, whatever inputs are there which goes into real estate, all the prices have gone up. So because of which, uh, I mean, the inventory also, which was there earlier, is not getting sold at distressed levels. They are also getting a good price for the inventory which they had. So inventory is getting cleared. New projects are getting launched. So real estate overall is looking good, at least in the foreseeable future. But the stocks have already run up. So if one can wait for a correction and buy them, maybe you can have a good run for the next 2 to 3 years.
Thank you so much. Nishika, do you have any closing thoughts?
Yeah, thank you, sir. It was a pleasure hosting you, and
Thank
thanks
you,
for
Nishika.
sharing your insights on deep value and contrarian investing. We hope to have a part two of this conversation very soon. And I really
Sure.
appreciate your time on behalf of all of us and wish you a very happy and a prosperous new year.
Thanks, Vishika, and wish all of you a very, very happy New Year and prosperous one too, and a healthy one.
Same to you, sir.
Thanks.
Thank you, sir. Just
Thanks.
want
Yeah.
to also point out that the link to Sir's small case has been pinned up, so you can go and have a look if you're interested in the small case. Also, please follow Sir and the moderators because we have a pretty exciting schedule of spaces coming up, and you really, really want to be a part of it. And like Mishika said, we look forward to having Amrish Sir here again. So with that, thank you everyone for coming out. Have an absolutely wonderful start to the new year, and hope everybody has a healthy, wealthy, and prosperous time ahead. Thank you very much.